In this video, I want to take a second look at the currencies, only this time I want to take a look at it from a day trading standpoint. In the previous video, we looked at the currencies from a long-term standpoint, looking at ways to maybe pick up some options for some longer-term position trades. But I want to also not forget that the Canadian dollar, the Euro FX, and the Japanese yen are really good day trading opportunities. And sometimes we forget about the currencies because we're so focused on the S&P 500 or the mini Dow or the NASDAQ or the Russell. When we're doing all of our day trading over there, we forget that we've got the currencies over here, and they're great opportunities as well. So I just want to kind of review and show you what's been happening with the currencies over the last little bit of time. Now, the currencies, we do trade them a little bit differently when we're day trading currencies. We call it day trading because it's down on a very small time frame here. For example, we're looking at the Canadian dollar and we're on the range bar 6 time frame. But we generally hold them. Once we get into a position, we'll hold them for a longer period of time. We don't generally get out at the end of the day. And the reason is because if we come over here and look, I want to show you the key for the Canadian dollar, and the initial margin on it's only $1,100. So that's nothing. I mean, you know, we can hold that overnight without a problem and take some of these longer positions into consideration. So once we get into the market, we really want to move our stop to break even and kind of wait for an arrow to get us out or some other reason to get us out of the market. We can get in with multiple contracts. It's easily done. You can see that on a day margin is only $550. So we can get in and trade these currencies with a small amount of money, move our stops to break even, you know, trail on multiple trailing stop locations and keep some for a longer time period and hold them overnight. It doesn't hurt us to hold it overnight when the initial margin is only $1,100. If we hold it for a couple of days, it's only $1,000 from our margin account. So trading these markets on a longer term time frame, we can then take into larger moves in the market into consideration. We don't have to be so micro in our analysis. So I want to bring that to your attention, and we call it day trading, but really it's longer term trading, position trading on a longer term basis on these very small time frame charts. So it's, you know, it's kind of a cross between the two. Let's come down here, and I want to show you the Euro FX as well. Euro FX, again, down here on the very small time frame, we call it day trading, but if we were really day trading, we would really only be staying in this market, you know, maybe this time frame right in here. This would be our day trade. And for a day trade on the currencies, oftentimes that's not enough to move the market to a point where it makes it worthwhile. It makes it difficult on us. So what we want to do is we want to take these positions in the market and then hang on to them overnight or even 2 or 3 days. And my goal is always to move out to a longer term time frame and see if we can't get into some of these longer term trends and stay in these markets for, you know, weeks on end sometimes. So this is a nice way to do that down here on these smaller term time frames, starting out on these and then moving out to longer term time frames, taking very small risks initially, getting our stops moved to break even, and then staying in these markets for the long run. But we want to be strategic about that. Obviously, we want to start off with our technical analysis out here on the daily chart. Look at where the market's at, look at where it's at in the count and the measure. Remember, count, measure, setup, trigger, and follow through. And we want to look to be trading the longer term trends, but we want to execute and enter those markets trends down here on the smaller term time frame. Take very small risks, move our stops to break even, break our stops apart, trail in different locations, and then play the market that way. So if we come in here and look at the Euro FX and we go to the key once again, you can see that the key for the Euro FX is $1,100 for a day trade. It's a little bit more, double the money for the Canadian dollar, and then the initial margin is $2,200. So we have to have a little bit more in our margin account for the Euro FX, but not nearly what we do if we come out here and look at the S&P. Look at the S&P. So this is an S&P market, one that we have a tendency to think in our mind, well, this is a day trading opportunity. We only want to get in and out in the same day. But if we look at it from a longer term time frame, here's the E-mini S&P. We should be able to consider ourselves longer term position holders in this market as well. Use these signals to get in, move our stops to break even, and let the market run. The problem with that in the E-mini S&P is it is a little bit bigger. If we come in here and look at the key, you'll notice that the day margin is $1,000 off peak, on peak. It's only $500. That's why this is very popular as a day trading strategy. But we want to be able to consider to hold these longer term time frame. But to do that in the E-mini S&P, you have to have nearly $7,000 to hold it overnight, okay, or $6,300 for a couple of days. And so that's, you know, that's the problem with the S&P is it's a little bit smaller on the initial day margin, but it's a little bit larger on the overnight session. If your margin account can accommodate, if your account can accommodate holding on to it overnight, I would recommend you do so. I'd recommend that you look for these longer term plays. Obviously, we want to come down. We want to look at the longer term charts and see where the market's going overall. See if we can't get into a position on the smaller term time frame. Hold on to that position. Wouldn't it be nice if we could get in on a range bar 6 right here at this red arrow and hold that thing all the way out until the market's currently trading right there? That'd have been a $10,000 move in the market by taking a position down on a range bar 6, holding it overnight, moving our stops to break even, and letting the market run. So that's the name of the game, right? Cut our losers short, let the market run. If we keep getting out at the end of the day, we never have the opportunity to pick up any of these long-term trends in the market. The goal is to always just try and keep the trade as long as we can, and we want to do that by analyzing on the long-term charts, even if our long-term chart is a 60-minute chart, right? If we come down to a 60-minute chart and say, okay, that's our long-term chart, okay, well, that's fine. Get in here using the range bar 6 chart. Try and hold on to your positions as long as you can and see how long you can stay in that market. Go for the 3-drive pattern, whatever you want to do on the 60-minute chart. But, once you get it in there, there's no reason you can't move it out to the longer-term daily chart. So the whole idea is we want to start from the top down. We don't want to start from the bottom up. Day traders have a tendency to always, the very first chart they look at is that range bar 6. They open up the software, boom, they're right in there to the 2-minute chart. Looking at the 2-minute chart. They're right in there looking at the range bar 6, trying to figure out where they're going to get in, get out on those small term time frame charts. So that's backwards. That's absolutely backwards. We need to be starting top down. We need to look at the daily chart. We need to come down to the 60-minute chart, down to the 30-minute chart, down to the 2-minute chart, down into that range bar 6 chart. And we want to decide where we're going to be at for that longer term haul. Okay, and again, the S&P, $6,000 to hold it overnight. So if your account can't accommodate that, then these currencies can do real well at that. If we come in here and look at the Japanese yen and look at the key, you'll see the Japanese yen, the day margin is 990, and holding it overnight is 1980. So, a third the amount of the S&P. So there's also, of course, we can go down to the mini micros, but we want to do the same thing on the mini micros. We want to look for that longer term trend, the longer term opportunities. Don't think that because you're a quote, quote, day trader means you have to get out at the end of the day. You don't. You have to go with the signals based on where they're at and try and get into those longer term trades for those longer term positions.